Good afternoon, everyone, and welcome to our live webinar, Income Now, Single Premium Immediate Annuity Payout Features within Defined Contribution Plans. On behalf of the entire team at DIETRICH and ANNUA, thank you for tuning in. My name is Krista Kotelis, and I'll be the conference moderator this afternoon. If you have any technical difficulties with your webinar software, please direct those questions to our tech manager, Lisa Straub, via the question area on your control panel. Any questions asked during the live session will be answered at the end of today's presentation. They can also be sent via the question feature on your webinar control panel. Any questions that we are not able to get to will be answered offline. Our panelists for today's session from DIETRICH and ANNUA are Client Relationship Managers, Mark Doherty and Jay Washington. Mark and Jay work directly with plan sponsors, retirement plan advisors, and insurance companies to provide pension plan risk advisory and insured retirement solutions to promote the financial health and effectiveness of retirement plan sponsors, the plans they manage, and the retirements they support through education, objective advice, and access to institutional solutions. At this time, I'll go ahead and turn the presentation over to Jay and Mark. Welcome, guys.
Thanks, Krista, and welcome everybody to our Income Now, Guaranteed Income Options for Defined Contribution Plans discussion. Wanted to start off with just talking to you guys about DIETRICH and who we are. So, who is DIETRICH? We are your experienced, and I think it's important to emphasize that, experienced partner for retirement income. Why are we experienced and how have we been doing this? For 40 years, we have been working primarily in the pension risk transfer business, helping plan sponsors and advisors and really all financial intermediaries affect services such as terminations and settlements of pension risk, all the way up to also going into the retirement plan market on the DC side with Annuities. We've been doing all of this primarily with the use of annuities, and that's where we really offer our annuity placement services. As I mentioned, we've been doing this for 40 years, which brings us to the experience that we've had that we're going to be talking about today. ANNUA. ANNUA is our defined contribution practice here at DIETRICH, and the idea behind that is that we want to really be the bridge between all financial intermediaries, those being plan sponsors, advisors, TPAs, and insurance companies. We firmly believe that we have products and services that can fit the needs of everyone. We do this, again, through providing access to institutional solutions aimed at being able to generate sustainable retirement income. We're an independent firm. What that means for you is that our objective is really tied to yours. So we work together in a collaborative approach to identify what your long-term goals are, look for solutions, and also find the best way that we can bring those ideas and solutions together for the betterment of both you as the intermediary as well as the ultimate end user, which would be the plan participant. Now, with this 40 years of experience, what that really has led to is the opportunity for us to forge and really build upon long-term relationships with highly rated insurance companies. When you think about it, I mentioned we've got about 40 years of experience. So when we're looking at providing defined contribution plans or 401k plans with guaranteed income, we've been around pretty much as long as the 401k. So we've been able to see its market mature, and we're really taking a look at what the next generation of that is and how we can help plan sponsors to allow it to meet the objectives that they're setting out for it. Now, ANNUA has 3 retirement planning options. We're going to focus on one today, which is Income Now, which is why you'll see it in the green. This is the first in a series of webinars that's going to talk about the different levels of income and the solutions that we offer to that. So please be on the lookout for those future webinars. Now, you may ask yourself, what are the reasons? Why should you be looking at lifetime income options? Well, we've all heard the buzz about, moving the shift from 401ks from looking at it as an accumulation asset and really focusing on the idea of what kind of income can it replace. As I was going through the RICP program, there's a huge focus on that and looking at the income and being able to think about it not only as you get to retirement, but thinking about it your whole career and planning there. When we look at assets for retirement, it's a very different view when you view the 401k as an asset or just a pot of money than when you look at it as income. The other reason, and some of you out there may have heard of this, is legislative actions in the Secure Act. I was reading an update this morning, and I love the fact that they refer to it as being in purgatory because it's been almost 6 months now since it passed almost unanimously through the House. An update for those of you who may not know, really nothing much has happened since last week, November 7th, which was a pretty busy day with Secure. Senator Rob Portman, who chairs the Finance Subcommittee, tried to bring it up for unanimous consent. That's where they brought up purgatory. His idea was to get it out of there. But unfortunately, it was shot down by the Democrats because there are some concerns on amendments. The other belief is that really Washington is so focused on the impeachment now that that's an impetus to the passing of the Secure Act. But it's definitely, there is still thought that it will pass before the end of the year. And what I think is really valuable and really important is that even leadership within the financial services industry is getting involved and urging the passing to the degree that advisors from all 50 states and the District of Columbia have written letters urging the passing of this. So, we've talked about how ANNUA came about. We've talked about how we work with you and also the legislative action that's going on, which, might make you wonder, everything seems to be in place. There is clear evidence that retirement income is a hot topic that people are talking about. So really, what's the challenge? Why is it something that there are still obstacles in implementing? At this point, I'd like to bring my colleague Mark in to talk about that as well as some solutions.
Thank you, Jay. And before I get started, I just want to thank everyone for joining us today. We know it's a busy time of year for everyone with just year-end things and other benefits and all the things you're addressing your clients, but we appreciate you taking the time. Jay and I were talking when we were putting this together. Jay and I have been to a bunch of conferences together. We demoed what we're going to show you today. We demoed it at ASPA. And what we saw was, from that, we really saw a demand from third-party administrators, advisors, plan sponsors who were all there that wanted to talk about how are they going to address the things that are coming out of Secure. But it's not just from Secure; it's from the need of the participant about why, or what is the participant going to do, and how are they going to make their money last, and what is the plan offering to make that happen. I mean, Jay, you saw it a lot too at ASPA, and you were just at Spark, and I think it was coming up there a lot.
Yeah, there is, they call it the retirement crisis. People are saving for retirement, but they're getting to the end and not realizing that, do they actually have enough to make that last? And if not, what are their alternatives to do so?
So when Jay and I are talking about it, you had people come up to Spark, and we had it at ASPA, we had it at Napa in Vegas last year. People basically asking, well, where are they going to get this information? How are we going to provide it to the participants? How are we, just how? So really, our answer to that was, to talk about these different, provide a solution for this. So when we talk to a participant is in a plan that wants to look at their different options, what's happening to that participant right now? That participant might want to add guaranteed income options. They might want to see it as a rollover. They might be talking to an advisor outside of the plan. They might be going to their bank. They might be going to a website. We really see that we need to, the plans need to start offering these options, to easy access, for the employees of the plans. and really help them manage those risks. And the way to do that is looking at single premium immediate annuity payout features actually within the plan or options coming out of the plan. Secure, with all its up and downs and not sure what's going to happen, has put this idea at the forefront. If Secure goes through, and we are starting to see it on some 401k statements as it is, it's going to be mandated that participant is going to see, hey, your balance equals X amount per month or per year. And they're going to want to know, how can I get that? So our solution to that, for you to be able to answer those questions, is ANNUA Direct Quote. ANNUA Direct Quote is really born out of the experience of DIETRICH that Jay spoke about. We use a similar system on our pension risk transfer side. You can get access to ANNUA through www.annua.com, and in the upper left-hand corner you'll see a blue button. Green is for DIETRICH, blue is for ANNUA. Blue is for the ANNUA Direct Quote. From there, you'd be asked to sign in. At the end, we'll have our contact information up. Jay, or you can speak to Jay or I, and we can assign you a username and password. Your username is going to be your email. We will assign you a secure password, and that will give you access to ANNUA. So we tried to make ANNUA as easy as possible. So what you will do is you will have to have some information available, state where the participant is this a qualified, non-qualified plan? Is it coming from a defined benefit or a defined contribution? What's the situation here, plan termination, retirement, those kind of things. Also just the general demographic information of the participant, date of birth. Also, if there's going to be a spouse or a survivor involved, we'll need their information as well. So you'll enter that information into the system, and within a few seconds, the system will produce a series of quotes for you, showing you some of the best options in the marketplace. From there, just a couple things on the screen. You'll see what we did for this. Just for example, here was a monthly benefit for Mr. A and Mrs. A. We don't have the numbers down below for you, but at the bottom would be who the provider is, the annuity form. You see that GP there. That's the guaranteed period. I want a 10-year certain. I want a 5-year certain. Lots of different options. SP is the survivor percentage, and then the quote amount. So we provide you an initial look through the marketplace of all this information. From there, if I'm you, I'm asking, well, why am I doing this? Why do I want to go through ADQ? Why can't I do this on my own? And I've been out in the marketplace for a long time, as Jay has, and there are certain advisors, for example, that probably have this. But what we found is a disconnect between plan sponsors, administrators, and especially a lot of plan-specific advisors that don't have large working relationships with annuity providers. And as the participants start to demand this, you're going to want it to be easy. So a couple of the advantages of ADQ with us: you get the instant quotes right away from highly rated companies. In preparation for the webinar, and I'd done it before, and I even checked today just to make sure I still was correct. Just go and Google annuity rates, and what do you find? You get a lot of commercials. You get directed to a lot of different individual insurance company sites. If you click on one, it'll say, hey, what would you like the model? Well, I'm 65 and I want to put X amount of dollars in for a certain period of time. And you'll hit a button and it'll say, great, fill this out and we'll contact you. So a lot of the actual information isn't always there. So the ability to answer those questions for your participants, whether you're a TPA or an advisor or a plan sponsor, would be very valuable. Second thing that ADQ provides is institutional pricing. So right now, your participants, when they are leaving the plan and looking at income options, where are they going? They're going to the retail market. So Institutional pricing, and I would just say the institutional model, is in a similar way to institutional pricing on a 401k plan, where you're looking at an easier group model for pricing and for service and implementation than you were on an individual retail basis. A quick example of that. I was talking to one of our people that help implement the policies once they come in. And an individual retail annuity right now, the application is anywhere from 30 to 40 pages, depending on the provider. Most of ours, because we're using an institutional group product, is 2 to 3 pages. Just that alone in terms of ease. But the ease of use and pricing are huge advantages for your participants. The ADQ allows you to model lots of different choices. You know, do I want to do part? Do I want to do all? You know, what's that right amount for me, and how do you come across it? And then obviously we can customize some of the integration. We have some new partners coming on board at the end of the year 2019 and 2020. They're going to start integrating this system into their systems. So it'll be available on their websites. It'll be available through their intranet sites, I should say. So different administrators might be able to use them in a case of a TPA. Basic idea is we can integrate this with you in lots of different ways. And you can have one password access for the company. You can have individual access. We can work with you on all of that in terms of integrating it into what works best for you. So I saw these points when it comes to guaranteed income and it comes to the annuity features that I just wanted to use to summarize how this works. First part is participant has to look at what their preferences are. So everyone is going to be different. We are actually, we attended a webinar a while ago about how to maximize, how much into an annuity, how much through periodic withdrawals, how much through other different savings. This is really an aspect for the participant and to work out in terms of what are they really looking to do? Are they looking to protect against longevity? So the annuity is a tool inside of that. But in this case, the participant is, looks at their preferences and says, I'd like to have a piece or part of my balance going when I'm retiring, going into some sort of annuity for those monthly payouts. The second thing is then, well, they have to, once they've made that decision, they have to evaluate those solutions. Right now, that's that big disconnect. And ADQ can be that bridge to that, where we can, as you saw in the output, we can show you all kinds of different options: survivor, non-survivor, straight through, life, 10 years certain, whatever you want to look at. But with those solutions, then you can really present solutions to meet those needs and those preferences that the participant wanted. And the last piece of it is really the communication piece. And this is the other part that we here at ANNUA will provide for you. Once you've seen the modeling and you're ready to move forward, Mark, Jay, I like, my participant here likes option 3 that you showed. How do we do that? And then we work with you and your staff, whether it's through a third-party administrator or through a plan sponsor or through an advisor. We work with you to illustrate those options and take it further and help you communicate that to the participant. At this time, that's the end of our presentation. At this time, I'm going to turn it back to Krista real quick. At the end of the slide, you'll see here there's my and Jay's contact information. If you'd like to have access to the system, just please reach out to us, and I'm sure we'll be sending follow-up information as well. And we'd love to help and get you set up.
Great, thank you guys. So we have, just enough time for a few questions that have come through here. So I'll go ahead and pitch those to you. The first one being, can you model a monthly benefit amount?
That's a great question, and it's funny because that's right where our system was born out of, because we initially had the system set up, and we do use the system on our pension risk transfer side, which is looking at monthly benefit amounts coming from a DB. But in this scenario for you, through ADQ, you would just click on the button that says define benefit, and then look to put in a monthly benefit amount, and then it would figure a cost for you for that benefit.
Great. All right, we've got another one that's come through. It's how do I add income to my plan if my record keeper isn't an insurance company?
That's a great question. It actually is fairly simple. We would work with you. It's an amendment to your retirement plan document, because what it comes down to is it's a distribution option, but one that allows you, as Mark mentioned earlier, to have the money go directly from the plan to the annuity provider. So we will work with you to amend the plan, just as you have lump sum, systematic withdrawal. You would simply add an amendment that allows for an annuity distribution as well.
I think just to add to that real quick, just different TPAs we've spoken to, and I meant to mention it before, but I think most TPAs I talk to, maybe like 5 or 10 out of every like 500 plans have it. But it's funny is when the 401k plan was set up, this was a normal distribution option, and most of them, for some reason, they seem like it just went away with restates and new plans and new documents. But it seems like it could make a comeback as going forward.
Great, and this is a question that I think we touched on a little bit, but it's always important to kind of circle back and chat about it a little bit further. What other support services are provided when implementing ADQ?
So, like we discussed, when a participant or whoever's modeling it on the ADQ site has presented those options, or they want to look at more, we here at ADQ, we'll do a follow-up to you just to say, hey, we saw you model, do you have any questions as well? But when you're ready, yes, my Mr. Participant would like option C or would like to explore option C, and then we get involved and work directly with you and the participant at that time.
I think it's also valuable to add that, we mentioned you will get 3 immediate quotes, but we work with a number of insurance partners. So once you tell us that you want to proceed, we actually will take it through an internal underwriting to go to the universe of insurance companies that we work with, and we will present to you the offers, and it is at your discretion to choose between you and the participant. So we truly do look out, we do the due diligence, and we look out for your best interest to see what all is available out there.
Great, and we have a question that just came in that's kind of touches on, Jay, what you just finished chatting about. Someone asked to explain the institutional pricing of the individual SPIA. Okay,
that's great. Thank you, Krista, for that. It's very important. We're all very cost conscious in the retirement planning market. That's all that you ever hear. And the way this works is that, again, we have those institutional relationships there, so we get institutional pricing. But from those group contracts, we're able to issue individual ones as people signed up for them. So what it results in is that although you are getting you're getting an insurance contract that is specific to you, you do get to take advantage of our long-term relationships with the insurance companies, therefore better pricing.
Great. And I've got another one too in regards to carriers, actually. What are the carrier minimum balance requirements?
Funny enough, we were discussing this at our last meeting, and I think we've done one as low as a $5 or $10 monthly benefit that came out of a DB. I think up to about $1 million, and it really depends on the carrier at that point. So if there was something more than that, we'd have to get a special approval from a carrier. But generally, anything on these individuals is anywhere from as low as you can imagine to about $1 million.
And that's the value add of the additional services, because when you do run a quote, of the three quotes you get, you may actually only get 2. One, it may not meet the minimums of 1, but when we get that internally, again, we take that through our entire universe. So we've been doing this for so long that really there's very few times that we can't find a placement for the annuity.
Great. I've got one more kind of touching on services that we were just talking about. So it is, how do your services help meet the new regulations and also safe harbor requirements?
So it's interesting. we look at it as a similar placement as to what a 401k plan might go through with any investment it would add. What happens if you want to add ABC mutual fund to your 401k lineup? That fund is examined and looked for, make sure it's no style drift, looking at returns, looking at manager tenure. We do the exact, in a similar way, obviously not with tenure differently, but we look at the financials. We look at the overall performance of the annuity. We look at the company making the promise. Beyond just their financial, we look at their capital. We take them through a full 6-step process, and we do a rating that the Department of Labor looks at. So we actually provide a very similar service on this annuity that you would want placed on your individual mutual fund inside, that you're going through on your 401k plan.
I think it's important to know, especially for the plan sponsors and the advisors who visit various asset managers. Mark brought up a great point. When you're looking at adding a mutual fund, you want to know what's going on. We do that here at DIETRICH. We go out on the road, we meet with the insurance carriers. If there's a change to ratings, we ask why. We take a look at this on an annual basis. We're in constant contact with the carriers, so we really do provide that added layer of security for the advisor, the TPA, or the plan sponsor who doesn't have a lot of relationships with insurance companies and may not know a great deal about them. That's a big part of the value add that ANNUA and DIETRICH bring.
And we have a full due diligence report we can provide to anybody they want on any of those providers, which is really helping them do that due diligence work.
Great, thanks guys. So I think we're getting pretty close to our 30-minute mark. We want to be respectful of everyone's time. I know everyone took a time to set for today to be here, and we appreciate that. So I just wanted to say, as a reminder, any questions that we were not able to get to will be addressed offline. And I wanted to thank Jay and Mark for a great presentation. And a replay of today's session will be sent out to all attendees via follow-up email. And also a reminder, please keep an eye out for future webinar invitations. And on behalf of the panelists and organizers, thank you so much for tuning in, and have a great afternoon.